Welcome back to Money and Meaning, stories of unlocking the potential of global markets for impact. I'm your host, Alex Kravitz. On this week's episode, I'm joined by Shalini Rao, the Director of Growth Equity at Generation Investment Management. Generation was founded back in 2004 by Al Gore and David Blood under the belief that fully integrating sustainability into their investment strategy would help to deliver long-term value to investors. They've since grown to have over $30 billion in assets under management, which they invest in both public and private equity strategies. The Growth Equity team recently closed their third Sustainable Solutions Fund in 2019 with over $1 billion in committed capital, which they invest into three broad impact areas: planetary health, people health, and financial inclusion. During the conversation, Shalini and I talk about the importance of fully integrating sustainability into the entire investment process, and how Generation uses investment roadmaps to identify systems positive outcomes in these areas, and then work back from those desired outcomes to identify viable investment opportunities. Let's jump into the conversation. Shalini, welcome to Money and Meaning.
Thank you very much. A true pleasure, Alex.
It's great to have you here. For listeners who maybe don't know about Generation Investment Management, could you provide a bit of an overview of the organization?
Yeah, absolutely. So Generation is a dedicated sustainable investment firm, is what we call ourselves. Been dedicated to sustainability from its very inception over 17 years or so ago. Sustainability sort of being the core of its investment process. If you think about, the broader investment context, we believe that integrating key sustainability considerations alongside fundamental financial analysis is really what delivers the best investment insights and ultimately performance. So it's this belief that you never need to sacrifice value for values, but that they're, fundamentally the same thing with a sufficiently long-term time horizon. And so from the very beginning, we've definitely taken that position. And I think pretty core to Generation is the fact that sustainability isn't just, a fund within the firm, but it's everything that the firm does, which is pretty cool.
Yeah. And you mentioned you've been around a long time, 17 years. Can you give us walk us through the Generation investment philosophy and if relevant, maybe how it's evolved over that time?
Yeah, absolutely. So going back 17 years ago, we started in public equities. So launched our listed equity strategy in about 2005 timeframe and moved into growth and private investments around 2008. So now into our second decade dedicated to private and to growth, that being the team that I work on specifically. But think about Generation as having, over $30 billion in assets under management focused on equities. And I think within this context, on the public side, we've always thought about that being a focus on companies that will thrive in a system positive, sustainable economy. And on the private side, that's, our companies who we think will, in many respects, drive that system positive outcome. But probably the best way to answer the latter part of your question is to say that our investment philosophy around integrated sustainability in particular is probably the thing that hasn't changed at all in the terms of, many offices, et cetera, but always pretty, sacrosanct around that philosophy. And I think fundamentally we think, not just about what a company does. So is it a best-in-class company driving a system-positive business outcome through the products and services it sells? And is this defensible? How high is the business quality, et cetera? But also how a company operates. So what is its governance like? Is its growth sustainable? Will it be able to attract key talent? I think we think a company's mission is ultimately upheld in its culture. And so we very much care about, the what alongside the how. And I think, again, those are the sorts of things that just haven't shifted at all.
I think from a historical standpoint, while not the first person in this sustainable investing space, I think Generation certainly helped bring it into the mainstream. What do you do at Generation? What's your role?
Yeah, so I'm an investor on our growth equity team. We're a team of about 12, 13 folks representing 8 or so different nationalities, making minority investments out of our now third and largest fund, which is just north of $1 billion.
Wow.
In mission-driven companies, right? Like the same sort of principle as across the firm more broadly. Focused specifically on 3 vectors, which, is how we kind of think about our sustainability outcomes. So planetary, people, financial inclusion. And then we take a sort of industry level view and define what system positive outcomes look like across those three vectors. So what does a system positive food and agricultural system look like, mobility system positive healthcare industry, future of work look like? We're all broadly generalists. I've spent a lot of my time focused on this latter category, the future of work in particular, within the broader remit of financial inclusion. And then, just considering all of the externalities, both positive and negative, and trying to mitigate those in our approach.
You mentioned briefly there that you think about systems positive outcomes, and I know you've talked about the use of investment roadmaps. Could you give an example of like what a systems positive outcome in future of work looks like, and maybe how you would work backwards from that to inform an investment decision?
This is probably the area on the team where we have a lot of rigorous debate, and I think it helps having kind of that 17-year track record of debating what system positive outcomes look like. So, within a future of work, I think we would define it as equitable, diverse, productive, perhaps, temporally and geographically agnostic in certain instances. There's clarity and transparency and balance amongst a host of other things. And I think it's crucially about helping people who might otherwise, somewhat be underserved by the incumbent system, and thinking through what are the different commercial interventions that can help drive towards that system positive work output and what sort of outcome. And I think, in defining what that perspective looks like, we then define what the different levers are. And that's kind of, if you think about what our roadmaps truly are, it's like an identification of those commercial innovations that are levers towards these outcomes. So in the past year or two, we've done roadmaps on the future of compensation. How do we think through what that ought to look like to help resolve some of these problems more broadly in terms of inequality within the workforce? Diversity software and HR software, particularly focused on diversity. We've looked at things like time tracking and shift scheduling for shift workers, upskilling and reskilling, all sort of really focused on identifying the sort of commercial theme and then a group of competitors, and then trying to think through, where value will accrue within each of those different themes, defined by our deep research on what those themes actually entail, but then also fundamentally a lot of these outcomes related to, what a positive future within those respective spaces looks like. So happy to provide an example there as well.
Yeah, that would be great. So you're starting with the problem basically, and then trying to find investments that are working to solve it. You're not finding good investments and then kind of figuring out what problems they're solving.
Exactly. I think that's a really good way of putting it. I think one thing that you see is kind of a bit of arbitrariness sometimes in impact assessments, and that's exactly the sort of thing that we're trying to avoid. It's first identifying the problem and then really focusing our energy on how you address some of the solutions. So perhaps to make this a bit less nebulous, let me walk you through a roadmap that we did specifically on retirement savings in the US. And our investment in guideline was kind of the output of that. But at a broader, inequality level, we are pretty concerned by the retirement savings gap and the fact that we're about to have a generation of baby boomers retire who don't have a social safety net, nor the infrastructure in place to really support the fact that this aging population is going to be reliant on a social safety net that's just not there. And saving rates and retirement pots are just far too low to also support this. So we did a roadmap that, looked into what is the problem, where is this problem most sort of poignant, how do we really sort of look at the various commercial innovations that are trying to address this problem, but then think about not only the sort of sustainability outcomes, which if you could see my hands now, Alex, you'd see that I was doing a really lovely hand diagram. But if you think about the y-axis is kind of like the impact bang for your buck. So how much of our system positive outcomes are we able to achieve? And then the x-axis is really about, where are you actually going to have a business model that is really financially sustainable with high moats and really able to sort of cater to the underserved population. And I think in digging into the problem, we identified that actually one of the biggest underserved populations within this retirement problem are small businesses. So within the small business segment, you have fewer than 10% of small businesses who actually have a retirement provided plan through your employer, which is really very low. So, if SMBs were able to offer more retirement savings to their employees, you'd therefore be able to resolve a lot of this gap. And if you think about the fact that there are 5.9 million small businesses in the US and it's like 90% of employees, et cetera, then this really adds up over time. And then I think, we look at tech innovation and which sort of innovations are actually happening in the market and why now, if at all, or should we wait? And we think that this market innovation might catch up. And in this instance, we felt that the fact that you now had the ability to, in Guideline's case, build the record keeper, a lot of the manual processes in-house meant that you were able to lower costs to serve. And we think value will accrue where you have low cost to a lot of these small business owners, where you have a lot of simplicity and transparency, frankly, around the pricing model. And so in thinking about where value will accrue and thinking about the underserved definition of what sort of demographic you're focused on, I think we really then are able to identify and aggregate up, where are we going to have, again, the biggest impact in terms of scalability of the business, but then also fundamentally the biggest impact in terms of, the core issues we're trying to resolve in the first place.
You mentioned it a little bit towards the end, but what exactly does Guideline do to solve that problem?
Yeah, so Guideline is a small business focused 401k provider. It leverages a SaaS-based pricing model to really just try to deliver a service to small businesses. It helps educate the market. And so it's a pretty efficient way, an effective way of trying to solve this gap.
Got it. So they're trying to bring down the cost for small businesses to provide this retirement benefit to their employees.
Yeah, and costs are huge, right? I mean, if you think about big players in the world, like the Charles Schwabs, like the fantastic businesses, just sort of, their ability to be fit for purpose for small businesses who really want to sort of, only have the ability to pay sort of lower rates is, there's that sort of mismatch. So I think there is something to be said about having a fairly bespoke product to cater to this end demographic.
Yeah, absolutely. How did you get into this work? What led you to Generation?
Yeah, it's been a wild ride in some respects. I really knew that I wanted to do something in social justice and sustainability, and those were the issues that I knew I wanted to devote my career to, something probably ingrained in myself and my sister through our upbringing and our personal context. But my sister and I were both first-generation university students, and so much of the end goal was getting into and doing well at university. And, at least for myself, I didn't have much clarity about what to do after. And sort of knew that I wanted to optimize for three things, having a positive impact in the world, being challenged intellectually and doing something that's interesting, and then, ultimately financial security for me and my family. And I dabbled with a couple of options, including law, but I'll spare you that saga, Alex.
Please.
And I spent the majority of the past decade in sustainable finance. So did a master's degree in finance to better understand the technical and theoretical basis for what I was doing, but really wanted to identify a firm that didn't think about finance as siloed from sustainability, which is quite a luxury, I think, where that's kind of still the majority of the market. And I think Generation is pretty unique. And I've been with the firm since early 2015, which, if you think about it, it was a pretty interesting year to join the firm. I just finished a pretty interesting book called Unsustainable Inequalities by a French economist called Lucas Chancel. And it reminded me that 2015 was the year that the Sustainable Development Goals were introduced. And I think, the SDGs, as you'll know better than anyone, were novel for two reasons, right? They brought together the environment, the economy, and social policy domains that had otherwise been pretty disconnected for the previous many decades. Mm-hmm. And then second, they were universal in scope, so applied to countries, small, large, industrialized, developing, and everything in between. And I think have been a huge catalyst in the momentum that you've seen since 2015. So also really cool to have been part of that ride at Generation since then, and pretty amazing that I was able to join a firm where they were already approaching the full remit of sustainability in this way.
Absolutely. It's been a exciting 7 years in the space for a variety of reasons, which we'll get into, I think, a little bit more. I mean, the past year, the pandemic has reshaped the way people think about at least two of the three impact areas that you highlighted at the beginning, and people health and financial inclusion. How has it changed the way that you're looking at those two impact areas and thinking about roadmaps and investment strategies and such to make sure that the recovery leads to a more equitable future?
Yeah, so, as soon as the pandemic hit, and as a way to really help our portfolio, right away we tried to convene resources. So we do these fairly regular roundtables or summits, and this one was obviously our first stab at a remote version of that. But we brought together 10 or so commercial innovators across the space, so businesses that are really focused on trying to cater to small businesses. And all together in the room, there were 300,000 small businesses represented, and we talked through, how are you guys thinking about helping your small businesses access PPP loans, and what other resources are available, and how do we share those resources, and how do we think about just information and communication. And so I think, we also consider ourselves pretty key players in the ecosystem. There's a bit of the investment world, which in some respects, and you hear this from entrepreneurs sometimes, it's, investors can be leeches. We are mere rent actors in their creation of value. And so I think we also think of it as incumbent on us to help drive value and add value to the companies in which we invest. All to say, it's been a pretty remarkable 18 months for everyone in so many respects. And it's been incredible to see our companies grow. And you've also seen a lot of strong growth come out of our companies focused on small business. And we think that's also a testament to their ability to help this end market.
Yeah, I mean, another area that's been hit particularly hard over the past year, 18 months, is the restaurant industry, which, I know you've published on its importance to the economy, to GDP, to employment. How are you evaluating opportunities in that space, and what would you consider a systems positive outcome for the restaurant industry emerging from this pandemic?
I mean, alongside some of our portfolio companies like Gusto and Guideline, who cater to small businesses and who were at that roundtable back, last April, we also had Toast in the room. Toast is a POS provider and software solutions for restaurants and for sort of small and medium-sized restaurants. And so we've been able to track the impact of COVID on the restaurant industry very much firsthand. And it's been incredible how, if you think about the restaurant industry, I mean, it's an industry known for its entrepreneurialism. And if we saw anything throughout COVID, it was that exactly. And I think we think the importance of the restaurant industry to a viable economy is pretty significant, right? I mean, you have the highest degree of diverse demographic mobility in any industry coming in the restaurant industry, but a really strong correlation between women entering the workforce and the restaurant industry. And then you also have the ability of new innovations in digitization to help solve for a massive commercial food waste issue, which is a huge emitter to greenhouse gases. And so I think what we've seen is a lot of resiliency and a lot of innovation and a lot of business model pivots made viable through, in many respects, the entrepreneurialism and also the digitization of this industry. And I think it will mean that hopefully what is created in the future, and what we have seen being built back will be built back better and in a sort of sustainable construct.
Yeah, and it's an industry that has notoriously small profit margin. So I imagine even some of those small, technology improvements can make a big difference. I've started seeing Toast everywhere recently after having never heard of it. So hopefully that means your investment is doing well. Another one of the fund's investments was into Asana, a project management software that at least for me doesn't immediately make me think like social enterprise. Can you explain how Asana fits into your investment philosophy or theory of change?
Yeah, totally. I'm glad you asked, Alex. Let's go back to our system positive definition of the future of work. And this wasn't sort of a convenient definition. I think we genuinely believe that this is what, a more sustainable future of work looks like, right? So again, I think what I said was something along the lines of equitable, productive, diverse, oftentimes temporally and geographically agnostic to actually allow for a lot of those other things to exist, right? So how do you think about flexibility in the workplace, but also how do you think about clarity and transparency and balance? And Asana actually came out of a roadmap that we did on remote collaboration. So we've spent a lot of time and a lot of resources allocated towards, a system positive mobility and transportation systems. We're investors in Proterra, the electric bus company based in the US, and investors in Gogoro, the electric scooter company based in Taiwan. And, we have a lot of theses around how we innovate the mobility industry. And I think one of those theses is also, how can we disintermediate in many cases the need to travel altogether? And as we've seen through at least some of the emissions outputs from this past year, remote work can actually be really positive for certain things, including fundamentally the environment. And so we identified Asana through that piece of work. It was constantly and consistently named as one of the top tools needed by remote workers. It's really loved by the knowledge workers who use it because of the clarity and transparency that it brings to them to sort of get rid of work about work. And so that's the what that the really achieves. And then there's the how, right? I mean, I think Asana is pretty best in class in terms of its culture and being consistently one of the best places to work, and all of these companies and certifications that sort of give those types of awards. And so we think that there's a ton of alignment there. And again, I think, if over 80% of our portfolio is identified through roadmaps, and roadmaps are being driven by trying to address those needs, then even though it might not be the most intuitive, as you perhaps said, those levers really point to the potential impact and the potential to do good.
You're investing in later stage private equity companies, and so I guess they're already fairly big, but I imagine it becomes more complicated when you're talking about the number of employees and the supply chain and some of the other factors with publicly traded companies.
Yeah, I mean, again, I think it's like this continuum of capital that we're able to provide means that the differences don't have to be that manifest. And because we work so collaboratively together, it's about the best performers from our fund graduating into the public side. And then we also have what we dubbed our long-term equity strategy. So if for whatever reason companies want to stay private for longer and don't, the public markets might not be the best place for them, then we also have the ability to invest over the long term on the private side. Slightly different from the growth equity strategy that I'm focused on, but definitely, again, about this sort of continuum of capital to really help support our entrepreneurs.
Yeah, that's interesting. And you've mentioned that Generation is a long-term investor, but still an investment necessitates some sort of like exit opportunity, right? So how do you think about that with regard to the long-term private equity strategy?
Yeah, I mean, our fiduciary responsibility is definitely to our LPs, our clients, and these are pension funds in most cases, right? And so we're very aligned with trying to get them the strongest outcomes possible. And I think in many cases, our long-term orientation, again, aligns itself well with our ability to hold things both publicly and privately for very much the long term. And then I think, we are, at the end of the day, we are investors. And so we have that mandate. But I don't think those two things necessarily need to be at odds. I think you can make money and definitely support companies for the very long term while doing that.
Impact funds and the public markets have had a really successful year, with the vast majority outperforming non-impact funds and benchmarks. In the private market side, what are you seeing in terms of the performance of social enterprises as opposed to their kind of non-impact peers?
There are increasingly mission-driven companies who are coming to the fore. We think that particularly on the private side, the commercial opportunity around sustainability is increasing, perhaps correlated with the demand and the need, frankly, to accelerate a lot of these sustainability levers due to the urgency of climate change, et cetera. And this commercial innovation is also something we've been tracking for a very long time. We do an annual sustainability trends report, which we use to track a lot of these commercial innovations and their uptick. And oftentimes people have thought about sustainability just as risk mitigation instead of as like massive opportunity to invest behind. So we're definitely keen and eager and happy to see a lot of social enterprises entering the market. I think where you kind of have at least some of the market mismatch is, just market dynamics currently, and trying to find the companies who don't feel sort of pressured by the market dynamics and are very aligned on the what and the how. And, I don't think we are wanting for a good discussions with people at the other end of the table. And so I would also suggest and urge companies to ask more of their investors, for sure, to ask for more value to be added, to ask for more alignment, to push investors as well, because I actually think in many respects it's companies that are leading a lot of the way in terms of sustainability.
Yeah, in the past 7 years that you've been there, we've been witness certainly to a pretty incredible rate of adoption of sustainable investing practices. And you just mentioned the shift in thinking about it from like risk mitigation to alpha opportunity. We've seen tons of new entrants to the field, mostly for the better, some maybe for the worse. But what do you see happening in the field of sustainable investing over the next 7 years?
Yeah, I mean, I think kind of what you're alluding to is the fact that people are arriving to the party, and that's great, right?
Yeah.
It's like, it's not a fun party to be partying by yourself. And I think, like, we've got over 17 years of experience doing this, and a performance track record in doing this. And so I guess we would say we're always very, very happy to help. And we spend a lot of our time actually, again, on ecosystem development and talking to co-investors. I guess the caution I would have is that, again, this isn't a fund for generation. This is everything that we are like fundamentally and intrinsically captured by is sustainability and everything that we're focused on. And within our firm, we don't have ESG analysts, the same analysts who are building the models and sort of debating some of the financial levers are those who are sitting around the table making the same debates around sustainability externalities and key levers to really move the dial. And I think you need that integration for sure to really sort of treat sustainability with the rigor that it ought to be and to help solve some of these gaps that you see in the market more broadly and to really sort of move the dial on how to make capital markets more sustainable generally. And that's why I got into investing and think it's so interesting. Could have done a host of other things, and I always thought I was going to work for a nonprofit. And, before, obviously, we talked about law. I think that's what makes capital markets so interesting is really this kind of, once in a lifetime opportunity and that substantial need. And so I think it's awesome that sustainability is, in many ways beginning to take root. I just think that we need to be incredibly rigorous about how we uphold it.
Yeah, no, absolutely. Is there anything that I haven't asked you that you'd like to mention before we sign off here?
Yeah, I guess I would, again, just sort of reemphasize this idea that the commercial opportunity in sustainability is huge. And so, I think it's exciting that you're seeing more firms being started up in a way that is galvanized by the desire to do something good in the world. So you're seeing a lot of companies that are increasingly mission-driven and focused on making real change instead of, I've got nothing against companies focused on like creating new games. It's just not kind of what gets me up in the morning. And so there are lots of issues to solve and probably not enough capital perhaps flowing to some of these issues, but that's what we're here for. And we're keen to seize those opportunities. And I think, really trying to think about like how we, again, galvanize that sort of sustainability innovation, both on the commercial side and then on the investor side is something that is pretty unique and an interesting opportunity. So very keen to help the markets move towards that.
Well, Shalini, thank you so much for taking the time to talk to me today and for all the great work you're doing at Generation and with the Sustainable Solutions Fund.
Absolute pleasure, Alex. And thank you for all of the great work you guys are doing at SOCAP as well.
Thanks for listening to this week's episode of Money and Meaning. I hope that you enjoyed the conversation with Shalini Rao of Generation Investment Management. If you want to learn more about the work that Shalini and the Generation team are doing, check out our website at socapglobal.com. And as always, give the show a good rating, review, share it with a friend, all that good stuff. And we'll be back in 2 weeks with a new episode.